Alright, I was going to do this video on the computer because we could read articles and I could show you stuff, but honestly, I'm just so excited. Merry Christmas, Happy Holidays. I love you guys, the people in the chat. It's fun. Great stream. The markets are exciting. It's been a great week. $21,000 realized profit. Got some more money sitting there on the table. We're going to talk about that, some other stuff. You guys have to join the stream, but this has been awesome. Hopefully you guys have made money. Some people said even they didn't make money. It's been awesome. I think this is what Christmas is about. We're going to have a stream on Christmas. You guys got to join. I think we have a pretty cool, the chat room on the live stream is probably one of the best, I think. We've got a diverse community. We got young guys, old guys. You got your guys who trade Forex. You got your degenerates, you got your YOLO traders, your risks management, your option sellers, your people who look at bonds, global events. It's great. So that's something, well, that's one thing I want to talk about. But the big thing I want to talk about is the Black Swan everybody's missing. And it's so important because it's related to what's going on right now. You're probably seeing the news all over, but the government shutdown. I made a video explaining that. You could go check it out. I have a link below for you in the description. And also read the descriptions. I actually typed stuff out in all of them for you guys. So, but it's related to that. But now we're going to get into some boring. It's not boring. It's going to be some political stuff. Hopefully you guys get your popcorn ready because we're going to talk about, you know, this relates to the Fed, interest rates, treasuries, bonds, and the government shutdown. And I'm gonna show you guys on the stock market everything we got going on because it's all connected. So this is a deeper level understanding. It kind of clicked for me when I was thinking about this, but I've talked about this prior, why it could be important, and now it's kind of showing through with a lot of the developments. And even right now, there's, you know, what's happening with the government shutdown. They've adjourned, they're leaving before the midnight deadline. They're going to meet up tomorrow at noon, and they still haven't voted, but pretty much they're saying it's most likely at the very least there's going to be a partial shutdown, but it's over the wall. It's over, you know, these little factors, but it's going, you know, I think that's the only factor, but it's not going to be good, and it has further implications, and it's with what the Fed's doing. I'm giving you guys a theory, and you guys will see. So where should we start? And even one thing you're even seeing now is Trump resign. That's trending on Twitter. I thought that was exciting as I was about getting ready to make this video. But let me show you the S&P 500. And here you go. Got 21,000 realized. Up close 4,000. You guys saw that video. Literally, by the time the video ended, I made a couple grand. That was pretty cool. But here is the S&P, and what I want to highlight for you is, so here's the 2-year chart. Obviously, it doesn't look good, and we've seen, you know, you guys have seen where it's at. But January 19th, and I highlighted this in the last video. So here is the last time there was the government shutdown, and it was also related. There was 3 in 2018, and now there's a small amount of government shutdowns that have occurred. Now, this isn't the Black Swan I'm talking about. And that's the thing. Let me get that straight here. It's not the Black Swan I want to discuss that the market's missing. I'm going to get there and elaborate to the point here. But actually, I'll just tell you guys right now, I hate it. I'm going to get straight to the point with it. But back to this. I'm going to show you the dates with that. But the point here, and I'm going to make another video talking about this, but it's going to be the debt ceiling. That is the issue and the potential risk it leads to. I talked about this briefly on stream, so I want to show you guys, but that is the Black Swan. I think the markets are missing, underpricing, and it's kind of shown its cracks related to trade. You know, there's two things. The gray swan is China, and the gray swan is the event that it's like it was unexpected at first, and now people know it's going to crash. People are, you know, so if it crashes again, it's kind of like, okay, it's in the middle of unexpected but expected. The Black Swan is the unexpected event that hits the market, and that's what I think, you know, we haven't seen too many headlines on this, and I think you guys prepare to. This is what I'm looking for, that first quarter of March, first quarter of the year coming into March when they have to decide on that. But so this is what I'm relating it to because these talks come up along with trade. But January, this was the first rate hike or the first government shutdown. Markets went up for a few days and then proceeded to come down into February. But now the interesting part, they went up and came down. This is where the trade talks, and I think that was the biggest issue that happened in February. People didn't really know what else it was, but then it was, I think there's other stuff with Russia, but February 9th, you guys could see the date, hopefully. Well, that's 12th. February 9th, kind of in here, you see where the markets was. It was at a low and around here. This is the next government shutdown. So we had 2 this year. And now you see where we are coming into this next talk. You know, we kind of had there were some spikes up and down until it was kind of confirmed. You know, he went back and forth. Sarah Sanders came on, but now that's not the issue. So what I want, and this is what I was saying, you guys look, you're going to see on CNBC, it's here, but there's 2 things. I'm going to go over 2 Wikipedia pages. You know, your history of the shutdowns, which we just discussed, but now a credit downgrade in 2011, because this relates to the video I just posted, and I've talked about this. If this isn't, I don't think it's like 2008, I think we're more like 2001, or it's 2010, 2011, but 2011 was the first time the S&P got downgraded, and that was related to the that was related to the debt ceiling. So let's actually go back and let me show you 2010, and it was a similar issue where we had debt issues, rates, bonds, government, you know, issues with central banks and Europe. There was, again, and this was right after the recovery. So I think it's 2 interesting times we're at, because 2010, 11 was like a few years after the crash. Coming in, you know, you don't know if it's going to drop, and you could see the market bounced. It went up a lot, had troubles the year earlier, but then, you know, started to come down again, and it was pretty violent. It was just like this, had the bounce, and then we came in and recovered pretty fully. But that downgrade, let me show you guys the date. This was one of the biggest days that it happened, but so the S&P downgrade was the first time it was given a rating in April. So I think you could even just see around April. There's March. No, I think it was August. No, that was that was a warning, right? Yeah, that was a negative outlook in April, and then August 23rd is when they announced that they, August 12th. No, it's August, and on a step down. Yeah, so that pretty much what I'm reading here is the history of it, because after this move, it was very controversial. The CEO of S&P, and that's the credit agency, they got downgraded. But this, in 2011, it was around August, September, and you see what happened to the market. It literally just fell off. I don't know, let me zoom in for you guys so you can get a better look. But the market literally just fell off. And it kind of looks like where we're at here. And this was August, September. Hopefully this isn't hurting your guys' eyes too much. Yeah, around those same dates. So, and that was because this was the first time since like 1860 the United States got a downgrade. Now, that's the important part, but what it was related to was the debt ceiling at the time and Obama. Now, I'm going to talk about this, and we're going to go over it, and this kind of explains a lot of it, but this is where this whole government shutdown comes into play and the Fed raising rates, because it is, and Trump getting impeached. That's another thing. If you guys, so let me, that's what I'm saying. This is going to get, it's already confusing. We're already 8 minutes into this, so bear with me, but I promise you it's kind of mind-blowing. And again, you might think I'm crazy, but hey. So when you put it into perspective, what is happening is that I think the worries of when the government shutdown's bad. If it's short, that's not going to be bad, but if it's long, it is. And I think they're preparing for that, a longer shutdown, which can be seen with the Fed raising rates, and the Fed may even, you know, they could be preparing. And why I say that is because, one, they think, Donald Trump himself thinks he could get impeached, and then a lot of other people think Donald Trump could get impeached. So if he's going to get impeached, he's going to be playing hardball. He doesn't really have anything to lose. It makes sense with this government shutdown. He's doing this over a wall. And again, too, the first time we had the government shutdowns, those first 2 times, those were the first times in history there was a government shutdown when the House and Senate was both in the incumbent or, you know, the same party's control. So now that it's not, there's going to be divisiveness, or, you know, they're going to be split. It's going to be bad. And then coming into next year, Trump knows after everything changes next year is he's going to be in trouble. He thinks he could get impeached. People want him impeached. He's going to play hardball with this, and I think that's exactly what's happening. And I think the Fed, and that reflects the Fed's moves, because if you guys aren't familiar with now how it works, if the government shuts down, they need money. You know, it's going to cost money if it's a long shutdown, but now they need to fund operations. And, you know, there's so many things. There's the essential, then the non-essential ones that they cut, and that's when the shutdown occurs, but they still need money, and we need it. And now with tax cuts, you know, this was one of the lowest revenues for the IRS and the government to bring in. Slowing trade, they're getting less money, and now with the government shutdown, they can't loan out and do that. So why that relates to the Fed, and what I'm saying here is that the Fed now, that is how money gets into the system. People are like, oh, the Federal Reserve prints all this money. Well, how does that money get into the system? Well, the Federal Reserve prints the money, and then the Federal Reserve goes and buys government bonds. So they go, you know, they give the money to the government to buy the bond, but the government's guaranteeing to pay back the Fed. You see how it's the fucked up weird cycle? So what I'm saying is now, and then think about what the Fed does. By the Fed raising short-term rates and those short-term rates going up, they do that to collect more interest and raise capital. So beyond the economy being hot and slowing growth, economies and central banks also raise rates to attract capital if they need capital or liquidity, because if you have higher rates, you're going to get more investment. So the Fed is now shrinking their balance sheet, selling off the stocks that were high, because they know if the government shuts down, the government's going to need money. This is going to be the way for the Federal Reserve to inject money. They're selling off the stocks, taking that profit, shrinking the balance sheet. Hopefully markets and job owning keeps it up, but then they go and buy the bonds. But it's essentially, it's just going to have liquidity for these central banks in the event of not only a crisis, but now a government shutdown. So it's just like kind of, I talked about this before with the first ever thing in Brexit, but these moves in fixed income, these moves with the Fed could be hinting, and then now the government shutdown and the wall, and now the likelihood of impeachment on Trump, and people saying he's not going to finish his term, and where the markets are, and how, you know, the markets get utilized as a political weapon, and that's what people are talking about, even with China. You know, that's pretty much what I think the next Black Swan is going to be the debt ceiling. So that's why, and I think the markets are reacting. We've seen how it's been on time, but now I think it's clear that we could expect maybe a longer than average, or than we've seen in the past, government shutdown mixed with these trade wars. And then now the political uncertainty, that's where people, I think, really underestimate. Trump has gotten very volatile. Now for the markets, even his talking doesn't work, and that's where I'm saying the impeachment comes in. It's getting kind of, you know, there's weird stuff happening at play, and there's going to be some effects. And again, there's gonna be downside effects, and obviously we've been very bearish, and you can see that. But if you've watched the live streams, you see what I'm trying to, you know, I'm playing both sides and going in on it. So that's pretty much it. Let me know what you guys think. Do I sound like a tinfoiler? I don't know, but this is both a mix of economics, and I'm taking my theory on it. I'm taking a leap and saying it's hinting at something. So it is very, you know, it's a mix of econ and my own, I guess, thoughts and ideas added to it. So let me know what you guys think, but hopefully you learned something from this. Yeah, I'll leave it there. Love you guys. Stay at school. Subscribe. Let me know. See you on stream Monday. Merry Christmas. Give back. That's what it's about.